Hi there, good afternoon. You're watching Closing Trades on ET now. Last 1 hour left of today's trading session. Let's take a look at what the market is up to right now. Nifty 50, 0.5% uptick coming in. We're significantly lower from the day's highest point. At one point, we were optimistic of crossing that 25,000 mark on the Nifty. But that has not been the case because we've once again slipped, and 24,812 is where we are at when it comes to Nifty. Sensex as well in tandem with the Nifty. A slip coming in on that front as well, but nonetheless a 0.5% uptick coming in. Slight recovery from the day's low for both Nifty and Sensex, but nonetheless quite off the day's highest point. India VIX is up almost 3.5%. We're close to that 18 mark on India VIX once again. So this is going to be important to watch out for the last hour of trade. Nifty Bank, 0.3% uptick coming in, slightly underperforming the benchmarks right now. Advanced decline ratio quite balanced, but only slightly tilting in the favor of the advances right now. So that's what the market construct is looking like overall. If you take a look at what the Nifty mid cap is up to, almost a 0.7% uptick coming in, so slightly outperforming the Nifty, and small cap is largely underperforming the entire market because just a 0.2% uptick is what you are seeing on the Nifty small cap index. But lots of stocks that are abuzz today: BEL, Cipla, Tech Mahindra, HDFC Life, Sun Pharma from the Nifty pack, and from the broader end of the market also a lot of stocks. But what's weighing on the Nifty, you have IndusInd Bank, weak set of numbers is what is expected. JSW Steel, Coal India, Kotak Bank, Grasim Trent, all causing some pressure on the Nifty. But let's talk about some other stocks that are in focus. And Shrishti, the likes of Dixon Tech, despite good numbers, that stock is tanking away.
Well, certainly, Snehi, because that stock is one of the biggest losers in FNO, because the execution plan and some of their key deals that has seen a delay. Other than that, the expensive valuations the stock which trades at is one of the other key concerns. But along with that, the pharma pack is doing very well today because, well, of course, Cipla, Sun Pharma, they are in the list of gainers on the Nifty 50 side. But within the broader market space, a lot of these pharma counters are also seen to be buzzing. Other than that, the IT is also seen to be catching up steam, and the life insurance counters, they are also bucking up the trend. Of late, we have seen that the life insurance counters specifically have seen a bit of a jump up. So that's what we are gathering on the markets as of now. Nifty has scaled back above that 24,800 mark as well, and 153 points of gain is what we are witnessing on the banking index. But what to make of the markets and where you should place your bets, let's try to decode that. And for this, we have been joined by Deepan Mehta, joining us on the show right now. Hi Deepan, a very good afternoon and thank you so much for your time. First up, Deepan, the earnings season is at the flag end. Give us your sense that which are the pockets that are looking attractive to you at this point in time, and what do you make of the markets?
Good afternoon and thank you for having me on your show. See, I think that broadly this earnings season has been a bit of a disappointment, and across the board, I think large sectors like banks, NBFCs, software, they have disappointed. And also, I think across the board, it seems that there are a lot of issues in terms of earnings growth, which of course may get resolved going forward with better monsoons, lower interest rates, and tax cuts. But this earnings season has been a mixed bag. And what this earnings season also is telling us is that the market is going to get extremely selective. And the broad-based rally which we saw for the last 3, 4 years, that may not continue into the future. Coming specific to your question as to which are the sectors where numbers were good, I thought we have saw the first good signs of pickup in consumption, especially urban consumption. So be it QSR or be it retail, be it hospitality or even healthcare, all of those sectors, travel, tourism, aviation, all of those did well. So that is, I think, one clear conclusion from this sector that consumption stocks started to do much better. Other than that, I think broadly it's been a bit of a mixed bag. But within sectors also, which are disappointed, there could be a few winners. Like in cement, I thought ACC, Ambuja, Birla Corp gave it good set of numbers. So like that, if you go sector by sector, there are some winners. But by and large, I think we come out of this earnings season with lower ideas or lesser ideas than when we enter it.
Take on the earning season, what Deepan is liking at this point. Deepan, hi, this is Snehi also joining in. Want to get your sense on the pharma sector, the sector in specific, because the kind of move we've seen from pharma, it has been underperforming the market, but today it is doing very well for itself. Names like Gland on the back of good set of numbers are keeping this pharma space in focus today. How would you play the pharma space? What would be your outlook going ahead, and which pockets or themes within the pharma pack you're liking at the moment?
Again, I think pharma is a classic example of what I said, that one needs to be very selective in the market. And within the pharma also, I think companies which have a slightly differentiated business model, they may emerge to be winners. Within the pharma space, we like the CDMO companies where we think there are good growth prospects. And overall, I think because of China plus one, they will benefit significantly. But there's still a lot of uncertainty around Trump tariffs for pharma companies, so that also needs to be kept in mind. So I would say it's important to be a bit selective and focus on companies which have a different business model. And on the whole, I think investors should be equal to slightly underweight pharma as well. Last few quarters have been exceptionally good, so base effect also will come into place from next quarter onwards. So you could see slowdown in earnings on that count as well.
Right, so be very selective when it comes to some of these pharma majors. But well, of course, today all eyes will be, and tomorrow as well, all eyes will be on Sun Pharma as the company will report its numbers. And indeed, it is the largest pharma player in the Indian markets. And other than that, what is really staying up well is BEL, because it was not just the earning that surprised the analysts, but given the commentary, the stock has seen a very fantastic run up, because in the last 1 month or so, if you see, then the stock has already shot up over 20%. I guess that number stands out at 23 to 24% on a 1 month basis. And like you see on your screen, the quarter four margins have jumped. The management upbeat on the guidance. 15% revenue growth is what they are penciling in. And off late, a lot of these new order inflows, especially from the defense pack and for drone segment as well, is what we are being looking forward to. But Deepan, given the run up, do you believe that the valuations are also attractive for some of these defense plays? And specifically, if we can talk about BEL, because this has definitely been one of the outperformers in the Nifty 50 pack.
So I think defense companies are clearly one segment where across the board we are seeing growth, and therefore investors are just piling up over there. It's a pretty small sector, I think around, I would say 8 lakhs or thereabout to the total market cap as compared to 440 lakhs for the entire NSE. So, and these counters also have very high promoter holdings, so floating stock is very low. And investors who are searching for growth, I think kind of zero in on this particular sector, which is that valuations are extremely expensive. And no doubt there will be growth, but I'm not sure the stock prices will give decent returns over the next 3 to 5 years or so. And the P multiples can only compress from these levels. Some of the risk factors related to defense, that being execution, delays in orders, competition, and government change of government policies are not yet completely factored in at these valuations. So as an existing shareholder, which for a matter of disclosure, we are in BEL, would remain invested, but from a fresh investment perspective, the risk return profile doesn't favor you. BEL per se also very expensive. I agree it's right now entering into a new growth phase, as is the case with Bharat Dynamics, also HAL, and a lot of other private sector defense contractors. But look, at these valuations, I don't feel the comfort in buying into them.
Okay, so that's a take on some of the defense counters that have been up in a buzz recently, but have seen a little bit of a pause in that rally. Deepan, also wanted to get your sense on Dixon Tech. It's a stock that's been in focus today on the back of its earnings. Good set of numbers coming in for the company, but on the flip side, the stock is lower by almost 6% as we speak. We have a note coming in from JM Financial today wherein they've downgraded the stock to a hold from a buy earlier and revised the target price lower to 15,650 from 16,500 earlier. And they're citing a delay in projects. This could weigh on the stock price going ahead. Deepan, despite this, the numbers, at least operationally, it has been a very strong quarter for Dixon. What are you making of this company going ahead, and what's your outlook here?
First, the disclosure, we and our clients are invested in it. And it's typically what is happening in railways, what is happening in the defense, some of the other high growth factors. The minute the numbers are slightly below street expectations, the stock is being punished. But on a standalone basis, if you didn't have any expectation, you would say that Dixon's numbers are extremely good. Management commentary also is quite positive. But the same situation that you cannot buy at these P multiples, they are just too expensive. These counters and many others in the defense sector are on the move. It's like a running train. If you try and catch it, you're not going to make a lot of gains out of them. So, like all investors, I think we are also remaining invested in Dixon, but certainly not advocating buying, making a fresh position. In fact, in some of our accounts, we have even trimmed our holdings in Dixon because of very expensive valuations.
Indeed, very expensive valuations. That's what we have been flagging since the start of the day. Even we can look at the 1 year forward multiple is already standing at 70 to 80 times. But definitely all throughout the years, the company has delivered, and then what the analysts are factoring in that particular way. But Deepan, the other theme that is doing well in the last couple of weeks actually, and everybody is penciling in a bigger growth story there, is the insurance basket. Specifically, what we are seeing is the life insurance as a play has been doing very well. If we can pull up the chart of HDFC Life, this is actually one of the top gainers in Nifty 50. And off late, all these other SBI, they are also seen to be catching steam. And with the insurance play, Deepan, even a stock like PB Fintech is also doing well. What's your current view on the life insurance space specifically? Because here, what the experts highlight that the valuations is not a big concern.
See, first of all, insurance is a very difficult sector to understand and value, right? Secondly, the insurance company, the private sector ones have been around for more than 10 years, and it's not exactly that they are given superlative returns. If you go back and see 10-year returns of insurance companies, it's like a single digit thereabout. Considering that it's a secular growth sector, considering that the business is in the nature of annuity, and there should hardly be any volatility in earnings. But nonetheless, the 10-year track record of the listed insurance players has not been that great. So now I'm come to the conclusion that we need to get underweight insurance per se. There are other ways to play insurance, and I certainly like the PB FinTech business model. There's also a small cap company called MediAssist, which provides TPS services to the insurance sector. They do claim processing. I think that company's got great prospects because a lot of the claim processing is getting outsourced. And as the industry grows, they will get more and more revenues from their existing customers. So while we like the insurance sector as a financialization theme, the better way to play it would be through ancillary companies which provide services to insurance companies rather than the insurance companies themselves directly.
That's a take on some of these insurance names. Deepan, I also want to get your view on the entire real estate space, especially on the back of two thrusts. First, that the sector has seen immense run up even when the market was overall lagging and the other sectors were underperforming over the last 1 or 2 weeks or so. And second, also now that the Maharashtra housing policy is in place, give us a sense of whether you see the affordable segment coming back to power, and on the back of that, some angst on that front, the likes of affordable housing financiers, or do you believe that luxury developers will still hold the upper hand when it comes to real estate?
See, when it comes to real estate companies, affordable housing is not going to make a big difference to their profitability. Whatever trends we are seeing, the profit growth, the revenue growth, the booking growth is all in the premium segment, in the kind of high value properties which they are selling. So I wouldn't bank too much on affordable housing as an opportunity for the listed real estate players. Secondly, I think that real estate prices and volumes have been significantly increasing last 4 or 5 years or so since we came out of the COVID. And these kind of growth rates, I'm not sure are sustainable. I know that real estate cycles are usually long, 8 years, 10 years, even beyond. But there could be, kind of a down cycle within a long-term multi-year up cycle as well. And I sense that next few quarters, you may see some flagging of growth, lower prices, lower volumes for the real estate sector. It may not reflect in the revenues and the profits because execution will pick up for these companies. But certainly, new bookings, collections may get impacted, and that's what is driving the valuation. So I'm getting a bit cautious on the real estate sector, and it's on my radar. It's a great sector to be in for the long term, but I'm just anticipating slower growth rates for the next few quarters or so, purely on account of mid-cycle softness.
That's the take coming in on the real estate pack. But moving on to some of the other news flow, and a day after the Foreign Secretary briefed the delegations going abroad to share India's message of Operation Sindoor, two groups have left for the global capitals. Remember that the 7 groups are heading to the US, West Asia, Japan and other regions to send a message against terrorism. Sumita Karir joins in with all the details. Take it away, Sumita.
Yes, in fact, India's message as far as Operation Sindoor is concerned, India's messaging to the world has begun. The diplomatic outreach has begun. At least 2 sets of these 7 delegations that you were talking about, 2 sets of these delegations are leaving today. The one led by Srikant Shinde and, of course, the other one that, of course, is led by Sanjay Jha of the JDU. Then there is another delegation that's all set to leave for Russia and other neighboring countries that will be led by Kanimoy of the DMK. The messaging is going to be a pretty cohesive one, which is going to be centered around the fact that India is now taking a no-nonsense approach to terrorism. There is no tolerance for terror, and any act of terror is going to be equated with an act of war, is what sources are telling us. Sources also tell us that these delegations that are visiting these several global capitals will be engaging with policy makers, heads of states, of course, the Indian community in those countries, and of course think tanks as well, to pass on this message, to give a briefing about how Operation Sindoor was executed, was conducted. These were precision strikes. There was no damage done to any civilian population in Pakistan. However, India did manage to very successfully hit the terror hotbeds in Pakistan and Pakistan-occupied Kashmir. So that's one messaging that's going to be going out from India. The other messaging is going to be around the fact that, terrorism does not just impact one country. It is a malaise that impacts all people across the globe. So this outreach is being made, and most important thing to understand here is the fact that these countries that India has selected to make that diplomatic outreach, these are permanent and non-permanent members of the United Nations Security Council. Remember, Pakistan is a non-permanent member of that. It's also making its own outreach that seems to be a copycat of India's diplomatic plan of action. However, important to also note that India is not making any diplomatic outreach as part of this 7 delegation grouping that's leaving today. India is not making any outreach to countries like Turkey and of course China. So very important, crucial visit being undertaken by India's lawmakers. Of course, there are members of the diplomatic community as well. There are ex-ambassadors and of course members of opposition parties taking that message across to the world that India and Pakistan should not be hyphenated. There should not be any hyphenation, given the fact that India has been a victim of terrorism since decades and Pakistan the perpetrator.
Sumita, thanks for that. So 2 groups out of the 7 have embarked on their journey to spread India's message of Operation Sindoor globally, but we'll bring you more updates as and when this develops going ahead. But time now to welcome on board our technical experts for the day. We have Nagraj Shetty as well as C.A. Rudramurthy joining us. Good afternoon to both of you. And Nagraj, let me come to you first. Give us a sense of the kind of move that we've expected on the market today, at least on the Nifty front, because we were expecting a muted start. That's exactly what we saw. Then we did see a run up, and now we've cooled off for a bit, and similar can be said for sensex, nifty, bank and mid cap as well. Well, on the other side, the small cap is underperforming the entire breadth of the market. Give us a sense of the kind of market moves we've seen and what we can expect heading into tomorrow's session.
Yeah, market has been, Nifty has been in a range bound action around 25,000 level. A strong resistance is placed, and at the 24,500 at the lower levels, I'm expecting Nifty to bounce back from near the support. The range movement is likely to continue, and this is just a pause of a trend, and after that we could see some decisive upside breakout of the hurdles once the range movement and this choppy trend completed.
The take on the markets. But Rudra, what about you? Because for today, well, we are getting to see the moves on both the sides, but still holding on to that shade of green. You have been quite bullish. You still hold that stance?
See, yes, good afternoon. Thank you, first of all, for having me in the show. See, we saw such a swift movement in market, and Nifty made a move of over 1,200, 1,300 point. Now we are seeing some amount of profit booking from the 25,200 resistance zone. So for me, every dips to levels closer to 24,500, will be a definite buying opportunity. Market now will see more moves on the broader, that is mid and small cap area. I'll be very stock specific and sector specific now, and also PSUs in general can do very good from here on. So for me, my bullishness remains in market. I'm just looking at time wise consolidation and some amount of profit booking at current levels at index. Broader market will definitely participate, and Nifty will also resume back its up move. All dips to levels closer to 24,500 will be a buying opportunity.
So that's the take coming in. Anything below 25 looking good to buy. Buy on dip strategy is being recommended by CA Rudra right now. But we'll have our experts join us again on the other side of this very short break. Viewers will be right back. You stay tuned.
Welcome back to Closing Trades right here on ET Now. The Indian markets are holding up well despite the fact that for now the cues that we are getting it from the globe and especially the US futures, they are tanking lower, but nevertheless we are still holding on to that shade of green. But other than that, like we have been talking about the insurance space, let's shift focus to an ET Now exclusive then, where we understand from sources that Prime Minister's office has met with the Department of Financial Services to understand the challenges faced by country's health insurance industry amidst low cover, sectoral complexities and lofty GST levy. Let's go across to Anurag Shah for more details on this one. Anurag?
PMO officials had a meeting with DFS yesterday, that is 20th of May, related to health insurance services and coverage in health insurance. So PMO has directed to ensure better health insurance services and faster cashless claim settlement. There is also focus on improving quality and reach of cashless services across the nation. As we know that as per the IRDA report, the penetration of health insurance has dropped and the growth in insurance sector has also decreased. So that was a cause of concern for PMO, and there are complaints related to health insurance services also, the deduction in health insurance claim. So in this regard, as per our sources, PMO has directed that to widening of a health insurance pool is also suggested to manage the rising claim outgo, and PMO has also emphasized to increasing the health insurance penetration across all age group, particularly the younger generation should be brought and the gambit of health insurance, and how the overall penetration of insurance can be increased to achieve the target of insurance for all. There are other issues also related to the health insurance sector also discussed as per our sources, and going ahead there will be more steps DFS will be taking to increase the insurance penetration, health insurance penetration, and the services related to health insurance and health insurance claims.
Okay, Anurag, thanks for taking us through all of those details. So that's the exclusive coming in on health insurance challenges and their meeting with the PMO. But let's move on and once again to focus to the market. And Rudra, we'll come to you. I have a question for you on your outlook on sensex, because just today from agencies we understand that Morgan Stanley has come out with their sensex target for June 2026, wherein they have pegged the sensex figure to be around 89,000. Tell us if you agree with this target. What's your one-year view for the sensex? And do you believe this is a fair target, it's a fair estimate, or do you believe this is slightly on the conservative side, given that we've also grown by roughly 7,500 points over the last 1 year as well, and that's how much of a gap they are penciling in for us now till next year? So what's your take on the sensex?
See, for me, having seen a consolidation from October to March this year, and also a move in larger indices from the April month to whatever we are now for about last 1.5 months, I feel yes, that level at around 89,000 to 90,000 Sensex target will be a 10% kind of a move from current market price. That is a very fair estimate. I may not be in a camp where I'm expecting a very, very big move in index as such, and having seen good gains for last 3-4 years, and this consolidation which happened for last 6 months from October to March, that's a fair estimate. And even for me, a Sensex target of about 10% from here for a year's time frame is good enough.
Looking good, at least the Morgan Stanley's target of 89,000 looking good to Rudra. Deepan, before we let you go, just want to get your view on a little bit more about this Morgan Stanley note where they are saying that they see higher discretionary consumption and emerging private capex pushing the earnings growth going ahead, and they're penciling in a high teens, mid to high teens earnings growth over the next 3 to 5 years. What are you making of some of these capex related themes, and what do you think is going to happen in this sector going forward?
No, I think the report resonates with me, and as I said, that this one of the winners of this earnings season have been the urban discretionary spend, where a lot of retail and related businesses, consumption-related businesses, have done very well, and capex cycle also should start to improve, according to me. So I think that these are the two investment themes which investors should definitely be overweight on, and within that also you could add cement because it'll benefit from higher infrastructure spend. But as I said, I also feel that it's time to get extremely selective. You may have a good investment theme, you may have an outperforming sector also, but it will count which stocks you pick within that particular investment theme or that sector.
We totally take your advice, but thank you so much for taking the time out and speaking with us this afternoon. All right, viewers, with this, let's move on. And Nagaraj, just wanted to have your take on some of these pharma counters, because that theme is also once again making a comeback. And off late, for this particular month, Nagaraj, there has been a lot of sector churning for a couple of days. One such sector picks up, and that does really well because we have seen this happening from the likes of for metal counters. The auto pack was buzzing just last week. But do you believe it's time for the pharma counters to do well?
Yeah, at least for some time, Nifty Pharma has bounced back from the lower levels, and we have seen previously this sector was underperforming. Recently, we have seen some good outperformance from the lower levels, and this upside momentum is likely to continue. There are some frontline stocks like Arrow Pharma, Lupin, and Dr. Reddy's, Davis Lab are they are placed at the very well technical point breakouts, and I'm expecting more upside in the frontline pharma stocks in the near term.
Okay, so that's the take on Nifty Pharma. And while we are speaking about pharma, we also have Sun Pharma numbers that are expected tomorrow. On a consolidated basis, we're expecting the revenue, EBITDA margins and net profit to go up. We'll be bringing on Varun quite shortly to tell us more about this. But before we do that, let's also bring on board Anshul Sehgal, founder of Sehgal Capital. And Anshul, hi, good afternoon, and thanks so much for your time and thanks for joining us on the show today. Help us understand a little bit about some of these tire stocks that we've seen. JK Tyre, for example, in focus today, a 12.5% uptick coming in, very sharp uptick coming in on this stock. What are you making of this tire space, the rubber space right now, since commodities are slightly pressured? Give us a sense on what you're making on these rubber beneficiaries as well as some of the crude beneficiaries, given that crude is once again trying to find its footing.
Afternoon, thanks for having me. Generally, it is a statement within the investment management community that if you're positive on autos, buy tires. What that means is that you don't know whether EVs will do well or the erstwhile engine companies will do well. But if either of those do well, tires as a result will be beneficiaries. And to top it all, here you have the play on commodity, because rubber prices decide whether tire companies make healthy margins or no. And if rubber prices ease off, then clearly that impacts margins positively. As you rightly mentioned, rubber prices have been kind of easing off in recent times. And as a result, we are seeing what we have noticed in recent times in stock price performance as also margin performance. And time will tell whether this continues or not. But by and large, if you're positive on the auto sector, then this is the space to be in.
So that's the outlook on the tires. But well, of course, very select companies are talking about a positive demand. But the biggest key trigger could be the cool off in the raw material prices and definitely the crude derivatives. But since we were just talking about the pharma space, so pharma major Sun Pharma is slated to report its numbers tomorrow. But what is the street penciling in? Let's get in all those details. And for that, let's go across to Varun, who's standing by with all the number crunching. Varun.
Well, we are expecting good set of results from Sun Pharma, wherein the revenues are expected to grow by around 9.3%. They are expected to come at around 13,100 crores, and the EBITDA is expected to grow by around 19.6%, and that would result into the margins going up from 25.3% to 27.7%. Now that's an increase of around 240 basis points. The profit is expected to grow by around 6.6% and come at around 2,830 crores. Now, if you look at the geographical mix, the India and emerging market, they are expected to grow by around 10 to 13%, and the US markets, if you look at that, the overall sales are expected to come by around 485 to 500 million dollars. Now, the US sales will actually be aided by the overall Revlimid sales, which are going to be better in this quarter. Also, if you look at the rest of the world, on a sequential basis, the rest of the world sales will actually decline by around 15 to 17%. Now, this is because of a milestone income that was there in the base quarter of around $45 million. This time it would not be there. So, that's the reason the rest of the world sequentially it would show a decline, and that would actually lead to an overall decline in the global specialty business on a quarter-on-quarter basis. But yes, on a YOY basis, there would be some growth. The R&D spends, they are expected to go up by around 80 to 100 basis points on a quarter-on-quarter basis. So let's see how much the impact is there on the overall margins. Keep an eye on the new product launches that the company is doing. But if you look at the overall results, we are expecting a good set of numbers from the company, especially on the margin front. Although in the last 3 quarters, the company has maintained a margin of around 28%. This time we are expecting 27.7% on a year-on-year basis. It's a rise of around 240 basis points.
Okay, Varun, thanks for taking us through that. So, good set of numbers expected from Sun Pharma tomorrow. But Varun, while you're with us, also talk to us about another nifty company that's expected to come out with its earnings later today, and that's ONGC. Now, revenue is expected to be flat on a sequential basis, but we do understand that the street is penciling in the profit to increase. Tell us what the overall consensus is and what are going to be some factors to watch out for when the numbers do come out.
Well, so you rightly said that operationally, if you look, the numbers are going to be weak. But yes, because of other income, because of taxes, you can see the overall profitability that is going to increase by around 7%, and we are expecting 8,810 crores. That is a profit number that we are expecting. Now, the revenues are going to be flat. Now, the basic reason because of which the revenues we are expecting a flat revenue is the sales for this quarter. They are expected to be flat. If you look at the production numbers, the crude production and the gas production, they are going to be down by around 2 to 5% on a quarter-on-quarter basis this quarter. And because of this, if you look, overall revenues are going to be flat. Now, if you look at the EBITDA, we are expecting the EBITDA to decline by around 4.25%, and because of this, the overall margins, they would decline by around 2.5 to 3%, and we are expecting a margin of around 53.9%. Now, if you look at the crude oil prices, they are down by around 8% on a quarter-on-quarter basis, and also the benchmark Singapore GRMs, they are down by around 58% on a YOY basis, and this will actually impact the overall realizations for ONGC and hence impacting the overall margins. For the APM gases, the prices have increased, but they have been increased in the month of April. So that impact will come in the Q1 quarter and not in the Q4 quarter, and hence you may not see the benefits of the APM gas in this quarter, and that's the reason the overall margins are going to be subdued. Keep an eye on the upgradation of the ramp up of the gas production facility that the company is doing. But if you look at the overall results, we are expecting subdued quarter from ONGC.
Quarter is expected from ONGC, and the stock of late has been hammered as well. But Rudra, give us your take on ONGC, because I think that the stock is trying to flirt with the levels of 250. Do you believe that it could be one of those breakout candidates, or do you believe that it could actually act as a resistance? Because the numbers are definitely awaited, but what are the charts telling you?
See, based on price action for very short term, if you see the last 1 week price action, definitely it is very positive. And even when markets were down, this stock is definitely outperforming. So for me, the likelihood of this breaking that resistance of around 250, 255 zone is very, very high. And definitely I feel keeping a tight stop loss now at around 243, I will be looking at buying ONGC right now. And once it breaks the 250, 255 kind of a range, yes, a move towards the 270, 75 zone is definitely open. So I will be pretty bullish on ONGC based on the last 1 week price action.
Call on ONGC coming from Rudra. Nagraj, coming to you, what are some of your stock recommendations? What's looking good on the charts at the moment?
I have two stock picks. One is from realty front, Oberoi Realty. If you look at the chartically, it was moving in a larger consolidation pattern over the last couple of months and currently placed at the hurdle of around 200-day EMA, making an attempt of upside breakout. The overall chart pattern of even real estate stocks, majorly Oberoi Realty, is looking very positive. I'm expecting a decisive upside breakout from here onwards. Currently trading around 173031 levels. One can look to buy at this point of time. The upside target would be around 1840, and one can place a stop loss at 1680 levels. Second one is Amber Limited. Amber Enterprises has been in a larger consolidation pattern, recently placed at the edge of upside breakout of the downsloping trend line, which is a strong technical resistance so far now around 6650 level. I'm expecting a upside breakout in the of the hurdle a very short period of time. One can look to buy at this current market price around 6625. The 7000 is going to be the next upside target in the near term, and 6450 is going to be the stop loss.
Right, so those are two of the calls coming in from Nagraj. But Rudra, what about you? What are your stock bets?
Of that consolidation and having made a strong move now from levels closer to those strong support areas of around 620 630, now it is breaking that 720 to 725 recent resistance. And if you see the volume action, it has been very positive. So I feel Tata Motor is headed towards that levels of around 800 820. But for very short term, yes, a target of 755 is possible on Tata Motor. Keep a tight stop loss of 715 for this long call. Another stock which has been very positive for me, and even on bad markets it is holding to its level, that is Pyramid Enterprise. So Pyramid Enterprises for me has again given a clear breakout above levels of 1080, and there has been a strong support in delivery volumes also in this counter. So for me, PEL is a stock to go long at current market price, looking at initial targets of 1200, and eventually yes, 1280 1300 is possible on PEL. Have a stop loss of 1120 for this long call. So a buy on Tata Motor and a buy on Pyramid Enterprise.
So buy on both of these counters is what Rudra is recommending. Let's watch out for that. But Anshul, just wanted to have your take on these cap good companies, because for today what we are seeing is that for a stock like Siemens, there's been no stopping after that analyst meet, and the company is quite positive across the board. They're expecting a margin recovery as well. The stock is shot up around 5%. And Anshul, in the earnings, we have seen, and specifically I remember it for Siemens, that though the net profit was below the street estimates, there was a dip of close to 40%, but the management commentary is really giving confidence to the investors, not just Siemens. Other than that, if we look at ABB India, all these counters have been holding up quite well. Do you believe it's once again time to look out for these names, or the valuations is not giving that much of a comfort here?
Hi, Srishti.
Hi.
Good to be speaking with you.
Yeah.
If you look at these companies, you're right. The results were slightly weak for the quarter. But then, if you look at both the commentary and the order book release of many of these companies, you will notice that the tailwinds are just not stopping on order inflows in these companies. That is giving you a signal that this is not a flash in the pan, that these companies are seeing so much growth, or they have seen so much growth over the last 3-4 years. What our assessment is that the sort of speed bump that we saw in capacity addition in the period, say 2012 to 2021, that speed bump will need a lot of catching up going forward. And with themes like Make in India, Atmanirbhar Bharat, as also attracting manufacturing into the country, which is a policy of this government now, the next 5-7 years are going to be tremendous for capacity addition in the country. Now, as a result, companies like the ones that you mentioned, they're going to see significant tailwinds in demand. A quarter here, a quarter there, they may see earnings slowdown, revenue degrowth, or whatever. But over a longish period, these companies will see significant tailwind. And clearly, the commentary of management of this one company is indicating that. we tend to concur that this is a sector which will have a long runway for growth, and where investor interest will also remain quite strong going forward.
Outlook coming in from Anshul on the entire cap good space as well. But viewers, on that note, we'll slip into a very short break. Last 15 or so minutes left of trade, and we'll be right back to start winding down for the day. Hi there, welcome back to Your Trades. Pardon me, you're watching Closing Trades on ET now. Let's start talking about some stocks that are going to be in focus on the back of their Q4 earnings. IndusInd Bank, a stock that has been down and out in today's trade and has been the biggest nifty loser today ever since the opening bank. So IndusInd Bank is going to be in focus on the back of its Q4 numbers, and this is also going to be in focus on the back of the discrepancy that we've seen coming in their accounts. It's going to be key to watch out for the kind of numbers the company comes out with this time. Gaurav is waiting by with more details on what we can expect when the numbers do come out.
IndusInd Bank is set to report one of the weakest quarter that we have seen so far, and there is some reason behind it. First, when we talk about the operational updates for Q4, we have already seen the bank has been suffering because of the higher MFI exposure, and as a result, when we talk about net interest margins for the last 4 quarters, we have seen net interest margins has fallen significantly. Other than that, when we talk about the MFI, the stress is not likely to go in near future, and that is the reason why that is one of the concerns. But apart from that, there is another concern which comes as discrepancies. When we talk about discrepancies, we already know that in this quarter, bank is set to report a discrepancy worth 1900 crore rupees because of the currency, and second discrepancy in net interest income in terms of 600 crore rupees. So definitely these numbers are going to impact adversely in terms of profitability, and if we consider these, the net interest income is likely to go down almost by 23%, and the PPOP, which is pre-provisional operating profit, is likely to go down more than 50% on a year-on-year basis. In fact, when we talk about asset quality, some concerns may still remain, and that is the reason why now brokerages are expecting slippages to remain elevated and credit cost also to remain elevated. Other than that, when we talk about profitability, bank can actually report losses in this quarter, but let's also not forget that bank has contingency buffers, and now brokerages are also believing that bank may use these contingency buffer to report profits and take some of the hit on the contingency buffer in terms of whatever discrepancies the bank is likely to report. Other than that, when we talk about advances and deposit, there also we may see a slowdown. They're expecting 6% growth on a year-on-year basis in both advances and deposits, and these may remain flat on a sequential basis. Other than that, when we talk about the commentary, we are expecting some kind of commentary in terms of how the management trend is going to be, because let's not forget that because of these discrepancies, CEO has also recently resigned. So definitely any kind of commentary on that front, how the growth is going to be, is a key thing to watch out for. How bank is set in terms of their asset quality is also something to be watch out for. And let's also not forget that now street is expecting net interest margins to contract more than 20 basis points sequentially. So definitely any kind of commentary on how the NIMS trajectory is going to be is a key thing to watch out for. But definitely a weak set of numbers is what street is expecting from IndusInd Bank in this quarter.
Well, thank you so much, Gaurav, for giving us those details. But Anshul, what do you make out of IndusInd Bank? Because we all are aware about the troubles with this particular banking major. But what, as per you, will be the key turning point for the investors that they should be watching out for? Is it the clarity for the with respect to the management? Any particular number that you will be looking forward to?
Krishti, I'll take you back to the days when there were troubles in another large private sector bank. Sometime around 2016-17, there were issues with ICICI Bank on credibility of management, as also on asset quality of that bank. Now, you will recall that for nearly a 3 to 4 year period, that bank had consolidated. It had really underperformed the private sector banking space, and the market was really struggling to understand how this will play out. What one needed to focus on at that time, in our judgment, was that are these issues of that bank then? Are those issues permanent or temporary? Can management credibility be, it can come back, or will it remain weak going forward? Can asset quality also improve, or will it remain weak? Now, fast forward to today's times, and we see one bank going through its troubles. The question again rises whether this is a permanent situation or a temporary situation. If in the case of ICICI, it turned out to be a temporary situation and the stock is up nearly 10 times since that weak situation at that time, and something similar plays out here, and your time horizon is not the next 2, 3 months, then you know the answer. But if your time horizon is in the short term, clearly I will be, or anybody will have a hard time giving an answer as to what you should do in this bank, because in this small time frame, the volatility will remain. There will be issues and news items which will come out, which will be adverse to the bank. But if your time horizon is in the long term, say 3, 5 years, then clearly situations like this, if they are temporary, there are opportunities to accumulate stocks in general, and my guess is that it will be something similar here.
Thanks so much for joining us, and I appreciate your time and for your views as well. While we are
Thanks,
talking
Neil.
about some earning candidates, ITC is going to be in focus, Nifty 50 major, and stock going to be releasing its earnings tomorrow, so the stock will be in focus. Let's take a look at what the street is penciling in largely when it comes to ITC's numbers, and the muted set is what we're expecting this time for ITC on a number of factors. But first, let's understand what the fine print could look like. Revenues estimated at 16,980 crores compared to 16,579, an uptick of just 2.4 basis percent. But other than this, all other metrics could continue to be in pressure because EBITDA is seen down 2.3% year on year at 6,018 crore. You have net profit also expected to fall by 1.5%. 4,934 crores is where we are seeing this number, and margins are also expected to contract at 35.4% compared to 37.1% year on year. Important factors to watch out for and important expectations. First of all, let's talk about the cigarette business. Cigarette volume growth is expected at 4.5%, so this continues to look healthy, and 6% sales growth is what you're expecting for the cigarette business. Paper, however, paper segment is expected to be weak and sales growth estimated at 4.5%, and paper business net profit could dip due to competition from imports. Also on the back of the paper business acquisition that the company has done recently, any commentary on that note also is going to be important to watch out for. For their FMCG biz, the sales are expected to grow 4%, and net profit and margins are expected to be under pressure overall due to the raw material inflation that we've seen in palm oil, maida, and negative pricing in notebooks that the company has undertaken. Agri sales are likely to surge 20% year on year on the back of a soft base. So when it comes to key monitorables, demand outlook on urban and rural sentiment is going to be important to watch out for. Competitive industry, raw material trends, especially the outlook on leaf tobacco prices for their cigarette business, agri business outlook, as well as pricing strategy are going to be in focus when the numbers do come out. But well, yes, muted set is what you're expecting from ITC for Q4.
All right, so a muted set expected from ITC, so all eyes on that. But Rudra, just a few minutes left for the market to close. How are you looking at the closing, and what are the key levels that you should be watching out for? And if already our traders have some of the positions either on the long or the short side, how should they hedge themselves? Give us some sense there.
See, I'm very clear dip has to be used as buying opportunity. In Nifty, 24,500 is a strong support, and on Bank Nifty, the levels are at around 54,000. So every dip to these levels, I'll be a buyer. I'll be very stock specific and sector specific in this market. For me, public sector undertakings look very, very good, especially if you look at themes like whether it is defense, or for that matter even shipping, railways, they all look very, very comfortable for me, and you should not miss these stocks to buy in this dip. And if I have to name some of them very quickly, look at stock like BEL and HAL when it comes to defense, and again for that matter railways, whether it is IRCTC or even Container Corp, looks very, very strong to me. And again from shipping, you have lot more names, whether it is JRSC or you want to pick Masgov Dock. So a lot of stocks in PSUs are very, very bullish for me, and I'll be using every dip in market to buy PSUs and PSUs.
That's a very bullish outlook coming in. And Rudra, on that note, we'll let you also go as well. Thanks so much for your time and thanks for joining us. But well, only a minute and a half left for market close. Let's quickly take stock of where the market stands at this point. 0.5% uptick coming in on Nifty today, 24,801, barely holding on to that 800 mark right now. So let's see what the next minute and a half holds for the Nifty. Sensex as well, 0.5% uptick coming over there. 81,500 is where we are holding steady. Nifty Bank, although underperforming the benchmark, so 0.3% uptick coming in, barely holding on to 55,000 by the skin of its teeth. The advance decline ratio in the favor of the advances today. Let's pull up India VIX and see what India VIX did. It has cooled off quite significantly and we're once again back to 17.5. The broader end of the market, small cap was not looking very optimistic today. Mid cap, however, has seen a sharp spike in the last few minutes, a 0.7% uptick coming in. Nifty small cap also a little bit respite from the day's low, a 0.3% uptick coming in for the Nifty small cap index. Let's take a look at what's done well for the index today. BEL, a 5% uptick coming in on the back of good management commentary and good numbers. Second consecutive day of gains for BEL. Tata Steel, Cipla, Bajaj Finserv, HDFC Life, Bajaj Auto, Sun Pharma continue to trade with gains of more than 1.5%. On the flip side, IndusInd Bank on the expected set of weak numbers, a 2% cut over there. JSW Steel, Kotak Coal India, Power Grid, Grasim, ITC continue to weigh on the index. Talking about the sectoral gainers and losers today, Realty continues to outperform, followed by Pharma, PSU banks, Energy, Auto, IT, Metal, Media, Bank, FMCG. That's the list of all your gainers in that particular order. And even though the market has been rather range bound, you have all your sectors that have ended in the green. So that's a positive to note in today's trading session. But well, yes, lots of stock specific action also coming in. But unfortunately, we're completely timed out in today's market session, and 24,800 at the dot is what we're seeing for Nifty 50. So well, we barely hung on to that 24,800 mark. Let's see what tomorrow's trading session holds for us. But on that note, we'll wrap it up on this edition of Closing Trades. Thanks so much for tuning in.